Commodity prices, they continue to soar. Crude has gained over the past year. It is now near $110 a barrel. That's dollars, yes. We've assembled a taking stock think tank to look at the effects of rising commodity prices. Neal Dingmann is an analyst with SunTrust Robinson Humphrey. And we also have Clayton Williams. He's a legend. He's also the president and chief executive of Clayton Williams Energy. And with us, Malone Mitchell, the chairman at TransAtlantic Petroleum. Gentlemen, great to have you with us. I want to begin by asking you, Clayton, if you can just give us a little history lesson. What was the first well that you drilled, and what did it feel like when it came in, and what was the result?
The first well was 1958. We thought it was hallelujah, and oh, I'm rich. And then when the production started, it was making 4 barrels a day, and the well didn't pay out. So all is not gold that glitters in the oil patch, as well as Wall Street. So
it doesn't just come out of the ground in one great shot. Malone, what was your experience getting into the oil business?
Actually, I first drilled my first well when I was still in college.
When you were in college?
It was.
They give you college credits for that?
Well, I was on a different kind of a credit program at that point in time, so it was actually completely addictive.
And where was this? Where did this well?
This was in northeast Oklahoma. And like all of these plays, if I still owned that acreage today, it would be more valuable than it was 30 years ago.
All right, well, let's talk about value in the energy sector. Neal Dingmann, come in on this topic. With oil at $110 a barrel, we're seeing the oil rig count go up, and it seems as though a lot of oil is going to be drilled in the United States. Is that correct?
It does. CapEx, I think you'll talk to both, listen from Malone and Clady today, and hear that both CapEx is up significantly this year versus last year. And as you said, Pimm, what we're seeing is really a convergence now of the oil rig count really taking off versus the gas rig count in previous years. And that's obviously where the growth is coming, is the liquids in the oil.
Clayton, at $110 a barrel, are we going to see even more growth for onshore oil in the United States?
We're seeing it as we speak. We are drilling stuff that was marginal at $30 or $40 or $50. Much of what we drill is low permeability, low porosity. We'll have 4,000 feet of sorry rock. You have fracturing. You hear about fracture now, maybe 8 stages. Frack all 8, maybe you'll make 100 barrels a day. So it's more effort, more energy to produce less oil, which is the way of our country. But yeah, more effort. Conversely, I think it's too high at the point. It doesn't take 110 for us to drill. We're happy to take it, but we could drill for 95 or 100. But we have no control, really. It's a lot of things are involved, as you know, the fear of Mideast breakup, depletion. Particularly the growth of the developing world is a major factor that we see. All these other people in other countries have learned that instead of plowing behind a mule, if you can drive a tractor with petroleum, you have a better standard of living. That's the real factor that's out there in the developing world.
And it makes it better for the mule, too.
That's right, yeah. Well, we eat the mule now.
Malone, you've got experience overseas as well as in the United States. Pick up on Clayton's thought about the developing world's demand for oil and the ability of those regions to actually supply it to their own people.
It is absolutely compelling that anywhere you go, just as Clady says, it's the incremental life that's generated out of hydrocarbons that is going to cause none of these countries to slow down their consumption of hydrocarbon. And nothing is concentrated. The energy that's concentrated in oil or gas is not something that's replicated by wind or solar or any of these other powers. So every country, I just returned from the Middle East, each of these countries are in an absolutely frantic appetite to increase the activity in the countries to be able to generate more oil and gas right now.
Neal Dingmann, you brought up that comparison between natural gas exploration in the United States and oil exploration. Do you think that natural gas is going to fade a little bit into the distance because of this demand and the high price for oil? Isn't that going to at least disrupt the plans of maybe Boone Pickens, who's counting on natural gas?
You know, I mean, Pimm, we've already obviously seen it fade quite a bit. I mean, you look now, oil to gas, we're at 24-to-1, where, you know, 5 years ago we were back to maybe 10 times. So clearly the oil to gas ratio has just continued to expand. And generally what we'll see is obviously as the number of gas rigs fade, eventually gas prices have to come back. The matter is when that happens.
Clayton, If you look right now and you wanted to get money, attract investors to drill new wells, no problem?
Well, we're self-funded pretty much, but no, not a problem. I'd like to add one thing on the supply and demand. The rig count for oil 3 years ago was 250, now it's 850. So the energy, the financial energy in this country has gone more to drilling for oil because it's more profitable. We have an abundance of natural gas because of the vast shale basins across the country. So gas continues to be weak compared to the BTU value of oil. So to me, I'm going for oil.
Malone, you're focused right now overseas. You've got a number of overseas operating areas. Give us a little bit of a highlight for people that may not be familiar with the country that you operate in and why that's tied to the price of Brent crude, not West Texas Intermediate. We get to Texas in a minute,
Well, our primary focus is in Turkey right now. Unfortunately, Turkey is a very working democracy. All of our countries that we're working in, Turkey, Romania, Bulgaria, and Morocco, are actually coming through this Middle East deal pretty stable. Most people don't realize the Arabian Plate extends north into Turkey and that there are billion-barrel fields in Turkey. But billion-barrel fields in Turkey, unlike the United States, where these fields have been fairly extensively developed, and we're now relying on fracture stimulation, horizontal technology. There, before we came, there had been less than 10 wells ever fracture stimulated in the entire country, and no wells really horizontally drilled. So I saw in 2007 and with TransAtlantic, it was just an opportunity to build very good acreage bases with good fiscal terms and introduce technology. So we're a scrappy little company. We've done that. We're plodding along with some steady production growth. It's not always been simple. Bureaucracies are present in every country throughout the world, but we're pleased with where we are, and we're pleased to not be in some of the other countries that we were close to being in.
Well, I was going to say also that you're a little bit more sophisticated maybe than that little description, because you did put together Sandridge Energy, right? I mean, you've got a big history in the oil business.
Well, we tend to like to go where there's a lot of cheap acreage that we can see apparent value, take some more risk from a geological standpoint, lean on the integration of services to really bring the cost down, and we think from that we get a real creation of value. I like that a lot better than I do going into a hot market where you really have to compete for very expensive acreage, although we do participate in a number of those plays in the United States.
Clayton, I want to turn you now to Texas. Let's go from Turkey to Texas and tell me about the old wells in Texas. How are they being re-energized in order to get the oil out? And today I read that the state legislature in Texas, the House, passed a law. Maybe they're going to increase the speed limit in Texas to 85 miles.
I saw that.
That's right.
Well, we have good highways that came from oil taxes. The old wells are still doing the best they can, but the whole development is of new wells drilling alongside and with the information gained from the older wells. For example, the Wolfberry, maybe you've heard of, we will drill from 7,000 to 11,000 feet. The rock is really very poor, very impermeable, hard. You'll fracture probably 8 different phases, separate frac. Then you'll commingle them. That's the word that we're using. We'll commingle all those different zones together, and then you make 100, 150 barrels a day. So it's really very poor quality rock, but covered with the fracturing and the prices, we're able to bring on a lot of production. And we're already in the Permian Basin having difficulty getting our oil out because we're producing more and more oil in these conditions.
Neal Dingmann, you heard about the oil in places such as Turkey and also in Texas. I want to get your thoughts about oil in the Gulf of Mexico. What's happening there?
You know, Pimm, we're seeing a slow recovery. I think it was maybe slower after the moratorium was lifted than people thought. You clearly are seeing some permits right now, but they're trickling out. I think the thought was maybe we would see many more at this time. So we do expect it to come, but it's going to take longer, I think, than people first realized.
All right, we've got to leave it there, gentlemen, but I want to thank you very much. Neal Dingmann from SunTrust Robinson Humphrey. Also, Malone Mitchell, appreciate your insights into what's going on overseas. And Clayton Williams for your expertise and your insights into oil and energy. Thank you.